Okay, how to choose a trading style. Of course, when everyone starts trading, almost everybody thinks about making profits in seconds, minutes. But in reality, most people fail who trade that way. So, how can you choose a trading style that actually makes sense and isn't grounded in reality? There's a few things that you need to consider. Firstly, it's time commitment. If you trade over larger time periods, there is a smaller daily, weekly, monthly effort required. So if you're busy, you have a job, you work 8 hours a day, you have hobbies, you have kids, whatever. In order to succeed, you don't have that much time. So investing might be better. Why? So let's look at this chart. This is Euro USD, the most traded thing on the planet. And so we can see that there's 3 sessions here. There's Tokyo, London, and New York. Okay, and we can see New York is from 8 a.m. Eastern Time to midnight for some reason. That's weird. But okay, whatever. We have London, which is from 2 a.m. Eastern Time to 11 a.m. Eastern Time. And then we have Tokyo, which is basically overnight for us North American folks, from 7 p.m. Eastern Time to 4 a.m. Eastern Time, right? And so the market's always moving. So if you want to day trade, if you want to trade within a day, you need to focus on the market during one of these periods, one of these sessions, right? If you trade stocks, so you just pull up Apple, right? If you trade stocks, you'll notice that there's these gaps occasionally, right? Why is there? Why is London, but the other 2 sessions don't exist? It's because you can see that here at the bottom, right, it shows 9:30 right here at the bottom, right, 9:30, but then this is 3:45. Why? Because the market closes after 4 o'clock, and it opens again at 9:30. And then it closes on Fridays, right? It's a big jump on Thursday to Friday, right? You only have such a limited time window. So if you're busy, it's not that easy to day trade. So what is investing? What does a day look like as an investor? It doesn't even look like necessarily looking at the markets. As an investor, you could look at the markets, you could analyze charts, you can analyze what the market's doing over the weekend. You can do it when the market's closed. Why? Because ultimately, you are looking at larger time horizons. You're looking at the weekly chart, right? You want to see what Apple does? Well, we can see overall it's, of course, super bullish over the past few years. This is April 20th of 2020, right? And we can see it's gone hugely up, and then it was noisy, right? From November 21st, like November 2021, all the way until, let's say here, March 2023. That's crazy. That's like over a year, right? And then finally, it's been bullish again for the past year and a bit, and now it's almost 2025, right? But we're looking at a weekly chart. We're looking at a weekly point of view. And so the daily schedule for somebody, you're not going to be taking a trade every day. You're not going to be taking a position every day. You'll be looking in the long term. We'll talk later as to how you're going to be doing that. However, should you be an investor? If you have limited time, yes, you should. Period. Now, if you want to talk about long-term or for your retirement investing, then just put money in an ETF or a broad index fund. Do your own research, right? But if you want to trade, you want to actively take positions and try to gain an edge in the market, earning more than your average of 10 to 20% per year that the average ETF does, then investing is for you. If you're interested in taking positions that are long, let's say weeks or months, but not years, then maybe you're interested in swing trading. This is the same asset, Apple, but on a daily chart as opposed to a weekly chart. So there's 7 times more candles, right? So this same long, you might have an entry, here on Friday, March 10th, 2023. You might have an entry here on 11th of April, 2023, right? But the point is, we're looking at a larger time horizon. And this is swing trading, right? You might be interested here. It might be interested in exiting here, right? This is less than a month. Just over a month, actually. The 12th of April to the 19th of May, right? But this is swing trading. And then finally, there's day trading. So here's the 15-minute chart of that same asset. And now let's pull up our sessions again, right? We can see every day the market starts at 9:30 and it runs, right? And so as we can see, there's typically a lot of volatility at the beginning of the day, but that doesn't mean it's the only time there's volatility, right? 9:30, this volatility went sideways, and then it finally decided what it was doing. This volatility also went sideways. This was a ton of noise this day, right? This day, market opened down here and just went long. Cool. Same here. This one, but the opposite, just kind of went short, right? But these decisions are on the 15 minutes, so you need to be here. You can't be waiting for the weekend. It means you're waking up early, you're checking the charts, you're getting ready, you're seeing your positions, you're being interested in what the market's going to do. Friday morning, did it dump? What's it doing? And so it's all about being on the chart actively, right? It's very important to be realistic with your trading goals because you're not getting rich quick. You're building a business. You're building a mom and pop shop with nobody, available. You have no money. You have nobody to hire. It's just you. And so do you expect to open a brick and mortar store and have $1 million tomorrow? No, you don't. At least you shouldn't. Right? You expect to attract come customers for the first few weeks, do some marketing, right? Maybe you break even for your first month in the first 3 to 6 months. And then, after the year, you'd be happy if you didn't lose any money that year. And then the second year, you make a little bit of profit. And then the third year, you're locked in and you're really growing your small business. Then the third year, you're opening a new location and then you're finally scaling up. This is the nature of trading. It takes time. Whether you day trade, whether you swing trade, or whether you invest. Whether you want to look at the weekly chart, the daily chart, or the 15-minute chart, or something within a day time frame. It takes time. So think about it. Think about how you want to view the market. This information will change over time, but ultimately you need to start off thinking about how you want to initially approach it, what speaks to you and the way you trade the most. Good luck.